Hello and welcome to the CNBC-TV18 special as we count down to the budget, the last full budget ahead of the general elections in 2024. All eyes are on the finance minister. Will budget 2023 be a budget that builds on the previous year's announcements? Or will the finance minister surprise the citizen and industry with some fresh triggers to accelerate growth? The Confederation of Indian Industry and CII, like every year, has come up with its recommendations for the finance minister ahead of the budget. From the economic policy standpoint, they say the key focus should be on augmenting both domestic and external demand, promoting investment and generating employment. Interestingly, CII is also batting for a cut in personal income tax. They also recommend standardizing holding periods and capital gains tax rates across asset classes. Well, to talk more about the mood that industry goes into budget 2023 with, joining me on the CII panel, Sanjiv Bajaj, the president of CII, Sanjiv Puri, the vice president of CII, Chandrajit, Banerjee, director general of CII, and Dinesh, the president designate of CII. Gentlemen, always a pleasure. Many thanks for joining us here on CNBC-TV18. Sanjiv Bajaj, let me start by asking you, we're literally counting down now to the budget. What's the mood across industry? Do you expect this budget to consolidate on the promises made over the last few years? Or are you expecting the finance minister to pull out a rabbit from her hat?
What I would say, Shereen, is that the mood is cautiously optimistic. We hope that this budget will consolidate on the issues raised earlier and will take forward also a number of important issues. Starting with fiscal management is going to be key. We believe that we need to adhere to the fiscal deficit target of 6.4% of GDP for this fiscal, start moving to 6% in the next year, and then eventually get to 4.5% by FY26. And this is because our external situation is still quite uncertain. So we want to ensure a reasonable level of macroeconomic stability in India in these times. To do this, I believe that the government should continue to focus aggressively on privatization, and we can talk about some of those things more, but continue to do that and also focus on revenue augmentation as well. So we would like to see this. In addition, there are some of the key points. The government has been very focused on an investment-led growth strategy. We hope we continue to see that in the coming budget as well, with a 35% increase in public capex like the previous year. We need to continue boosting consumption demand, and that's where you mentioned about rationalizing of personal income tax levels. We see that it is people at the lower income level who got hit through the pandemic and higher inflation the most. And that's why what we're recommending is a rationalization at this lower income level. I think that's important to note. And lastly, we need to look at all this. We need to look at agriculture so that overall, whether in urban or rural India, we're generating more jobs.
Yes, I think the point that you make as far as fiscal consolidation is well taken. And because the government has the buffer on account of strong tax collections this time around, the expectation is that at least for the year, they will be able to meet the fiscal deficit target, if not improve it slightly. But the question is that glide path to 4.5%. But Sanjiv Puri, let me address the issue of consumption with you. As Sanjiv Bajaj pointed out, we have seen on account of high inflation as well as the COVID-19 pandemic, the impact being borne by the bottom end of the pyramid. Now, in terms of consumption demand, what do you believe the government can do? What are you hoping that the government does in the budget?
Okay, let me start off by saying that, as you know, there have been concerns on consumption at the rural end. Right? So I think we are seeing signs of pickup. And if you dissect the rural economy, it's really 1/3 rural wages, 1/3 farm incomes, and 1/3 off-farm incomes. So we are certainly seeing rural wages are up. We also believe realizations will be better as far as the farm incomes are concerned. So net, I think it's a positive. So I do believe that rural will pick up. Having said that, I think we are still not out of the woods. Overall, consumption needs to be boosted. And the fundamental pillar to that, I think, is really either through having more money in the hands of the consumers, which Sanjiv just alluded to in terms of the income tax at the bottom end, or the other is about creating jobs. And I think the PLI schemes have worked well. There's an opportunity to expand it, and there is some mention of it already through some large employment generation sectors, whether there is apparel or toys or footwear, amongst others. The second is, of course, to build on farm incomes, to exploit the full potential of agriculture. I think the trajectory that has been started in earlier budgets with focus on inducing technology, with focus on aggregation through FPOs, the agri-infrastructure funds, I think those are the right steps, and we should build on it and maybe work out mechanisms through cluster-based to accelerate the progress, intensify investments in research and development. And the third sector, I think it's also an opportunity, given that India holds the presidency of G20, is also about the opportunity in the tourism sector. And that's been part of the strategy also of the government to showcase what India has to offer. Now, that's an area where India has tremendous opportunity, and we can actually work together, showcase it, and create the enabling interventions so that tourism also multiplies over time. Tourism itself is, can create as much as 50 million jobs in the next few years.
Well, yes, that is, of course, that has been a long-standing demand that India put its focus on the tourism sector. In fact, I was having a conversation with the Civil Aviation Minister, Jyotiraditya Scindia, on Wednesday, the National Tourism Day, and the plan is to try and put together an integrated approach, combining civil aviation with hospital tourism and hospitality, and, of course, try and capitalize on the G20 opportunity. Infrastructure status is the big demand for the sector as far as industry is concerned. Chandrajit, Banerjee, what's the expectation? How different is this budget likely to be, given the fact that this is going to be the last full budget ahead of the general elections?
So, like what has been just said, Shereen, I would think that we really need to focus on consumption demand. And I think that's something that we would certainly expect to see. There has to be a focus on growth, obviously, pursuing an investment-led growth strategy is what we have been talking about, and the budget should actually keep that, increase allocation to capital expenditure by 35%, like what it did last year, taking the total capex, so to say, to 10 lakh crores. And as was said, we must also actually see much of it is focused on the rural, which will create that employment in the rural areas, boost rural demand, which has been sort of a concern while there is some pickup. The third thing I would think, which one would look out for in the budget, you know about the PLI. We've seen some good results of it. There has been some issues. We would look at that PLI getting extended, and also to look at something like an employment-linked incentive scheme. But tourism was one sector, but there are other sectors like logistics, retail, many others, newer sectors which was brought in the last budget, the AVGC, say for instance, animation could be, I would expect that in the budget, and the government could consider something like a urban employment guarantee scheme. That could be something important. And last, I think I want to mention one point. There has been recognition, and there has been a strong recognition towards business. And I think for this budget, it could consider something like a cross-ministry compliance commission to rationalize, digitize, as well as and decriminalize. That's India's regulations. 65,000 plus compliance requirements. Can we have something towards that? These are some of my expectations, which is quite similar, but in some cases I thought I'll bring in some of the other points that I had in mind.
CB, the Urban Employment Guarantee Scheme has been a recommendation that CII has put on the table for the last several years. The government has veered away from acting on that. Even the employment-linked schemes that you talk of to generate employment, the tax incentives, that again I know has been a demand that CII has put on the table. But again, that hasn't found favor with the government so far. Let's see if this is going to be the year that things change. But Mr. Dinesh, let me come to you now and address the larger issue. One, of course, as Sanjiv Bajaj was pointing out, to ensure that macroeconomic stability continues. The government has done well on that, and all indications suggest that they would like to continue on the path of fiscal consolidation. But outside of that, on some of the pending things, privatization, especially bank privatization, etc., we haven't seen the changes being brought in. The bills haven't moved through Parliament. Is there now, a realization or an acknowledgement within industry that that's going to be parked aside for now?
Thank you, Shereen. I think the way I would look at it is that I think they have done significant steps, especially with the LIC going public, which I think has been a big step forward, maybe created the largest corporation out of India. So I think the intent is very much there. But considering the time we have and also the plans which have been put in place, I do believe there will be further continuation of that. And I think that's something which CII has been pushing for. But having said that, I think the public-private partnership is something which has been on the agenda for a long period of time. And that's something which I think we will really look forward to taking further momentum. And let us not forget, like we said, last year has been a significant achievements have happened with the various initiatives which they've taken, not only with LIC, but also Air India and the others which have been closed. So for us, I don't think there will be a pause. I think it will continue. And that's something which from CII side, we will definitely be looking forward to continuing to happen. But having said that, on the public-private partnership side, especially with regard to the Gati Shakti initiatives which have been put in place, I believe there will be a huge opportunity for both the private sector and the government to work together to further the capex being spent and also the utilization of the capex, which will again lead to further employment generation.
Well, on that note, we'll take a break and continue our conversation with the leaders from the Confederation of Indian Industry on what they want from Finance Minister Nirmala Sitharaman. Welcome back. We're counting down to the Union Budget 2023. What does India Inc. want from the Finance Minister? Here's the top leadership of CII with their wish list. Sanjiv Bajaj, let me come back to you with one of the key expectations or perhaps even a fear within the market that could the government make changes as far as the capital gains tax regime is concerned. What's the expectation? There has been the call for parity across different asset classes. We don't know whether this is going to be the budget that the government decides to do something about that or not. In his last conversation, the former Revenue Secretary did suggest that there wasn't enough by way of consultation that had happened on the issue. So there's a question mark there. What's the industry expectation?
See, very clearly, Shereen, by rationalizing the capital gains tax structure further, we're just moving ahead on ease of doing business. And this is very important as we are expecting new investment to come in across multiple asset classes. So today, if you see, there is no consistency in tax rates for holding periods for different types of instruments which fall within the same asset class. Even the indexation benefits differ in different situations. And we also know that tax rates differ for residents and non-residents. Now, keeping in mind the significant amount of capital we need to attract in India, both domestic and foreign, for the next many years to upgrade our own nation towards a developed country, we have to ensure that we simplify all these different rates and structures so that we are able to attract this investment across asset classes. That is the main focus from CII.
Yes, that is the main focus and one of the recommendations. Let's see whether this is going to be the budget that takes that forward or not. But Sanjiv Puri, coming back to you, and there was a lot of conversation that we've had so far on what the government can do to try and ensure that the rural economy sees a pickup. And you are hopeful that there will be a turnaround, and you're seeing visible signs, green shoots at this point in time. But on balance, where is it that you're still seeing pain within the rural pockets as well? The expectation, again, is that as far as the NREGS allocation is concerned, like we saw in the previous budget, there will be an increase there. But what more would you like to see happen on that front? And specifically, where exactly is the pain that you are seeing as far as the rural economy is concerned?
So if I was to just step back, Shereen, the cause of a tepid consumption in rural has been really inflation-induced. And farm realizations have been better, but the input costs have also gone up. And whatever the consumer was buying, it was more expensive. So that's been really the issue. I think inflation is cooled off. I think the farm incomes are going to be a positive. And as I said, also the commodities for the inputs as far as farm is concerned are also cooled off. So net is getting better. Now, what else can be done? I think certainly the points have already been made. It's more about how jobs can be created. So how do we leverage tourism for rural economy? We focus the infrastructure investments in the rural economy. I think how do we progress on the strengthening the competitiveness of the agri value chains? I think these are important, and this will certainly strengthen rural economy. And I'll just add to that, rural economy is certainly agriculture is a big component. So it is also something that is very vulnerable to climate change. So we certainly need to press the accelerator on building resilience in the agri value chains. A lot more focus on adaptation is required. A lot more investments in research for developing more resilient varieties are required, whilst through the induction of technology and through digital mechanisms, we educate the farmers on the best practices to build resilience. I think these are essentially the things that are required to be done. Now, I'll also add to that. The steps that have been taken in the past of taking whether it's the water connection or sanitation or whether it's the electricity connection to the last mile, I think all these are actually empowering the rural community. So those steps also need to continue. That needs to continue. So that people are experiencing much more empowered than they are today with all these facilities, and therefore productivity improves. Infrastructure should focus on the last mile connectivity to the rural areas. I think all these will provide impetus to the rural economy.
Mr. Dinesh, let me address the issue of the defense budget, because globally what we are seeing at this point in time, given the sort of geopolitical situation, is that defense budgets have seen a significant hike. What's the expectation? Last year, there was a 12% increase as far as the defense budget was concerned, but under 50%, and I'm looking at the numbers, under 50% of defense capex has been utilized so far this fiscal. What's the expectation on defense? And outside of that, some of the areas of focus, for instance, climate, renewable energy, do you expect those to be front and center in this budget?
Yes. I think from a defense perspective, I think the government has been very clearly focused on making sure that the India focus, or I would say for sourcing from India, is made. I think that's something which is genuinely a strong focus, which we are very much supportive of. We believe that will make a big difference for us. And I don't expect that defense spending is going to come down. And this presents a huge opportunity, not just from an Indian industry perspective, but also to make sure that we are self-reliant from not just weaponry, but also the various support activities which the defense is looking at. I think there will be a focus on the tooth-to-tail ratio, meaning making sure that the maximum spend is for the benefit of the immediate requirements of the defense forces, rather than the backside of the activities which normally take place. But having said that, I think the opportunity from Indian industry, and I would call it the focus on self-reliance, is something which we will continue to look forward to from a defense perspective. On the overall, sorry, I missed the second part of your question, Shereen, if you don't mind repeating that.
I was talking focus areas, renewable energy, the climate transition. These have, of course, found favor in the previous budgets. The hydrogen mission, of course, has been announced ahead of the budget. What would the expectation be on some of the other key focus areas?
Thanks. I think, yes, that's perfect. Actually, I would say India has really done even better than what the rest of the world was expecting us to do. I think the clear message has been sent that we are going to be focusing on the targets which we have set, and that we may even exceed the speed at which we are going ahead. I think from a renewable energy perspective, I think the focus and the various plans which have been drawn, not just for, again, making sure the components are being manufactured locally and also the assembly take place here, has been a significant benefit, both from creating infrastructure and also the investment side. On the climate side, I think already Sanjiv Puri mentioned that. I think there are various actions underway, and I'm seeing or expecting that there will be further focus and investments being made from the government side to speed up that. I would say from a private sector, we are very much comfortable working with the government on this, because we see huge opportunity, not just to be investing in India, but also creating the right infrastructure to make it for the future as well.
Yeah, Sanjiv Bajaj, I want to come back to you. Do you expect the government to lay out a roadmap as far as some of the key incentives and subsidies are concerned? For instance, the demand from industry has been that given the pandemic, etc., that 15% concessional tax rate, there should be another 5-year window that the government provides just to give predictability to both domestic investors and global investors. Do you see that happening on some of the other crucial incentives or subsidies like the FAME subsidy for electric mobility? The sun sets in 2024. Do you believe that this budget may articulate a roadmap for some of these key incentives and subsidies?
I hope we see that, Shereen, because it's equally important that we start getting away from subsidies, especially the non-merit subsidies. And that's why subsidies that you have mentioned, whether it's for FAME, whether it's for investment in a cleaner environment to attract new investment in CapEx, for which the extension of that 15% tax is something that has been requested. These are all towards productive uses, and they will help us with growth, they will help us with jobs, they will help us with revenue. And we have to be real about the fact that the pandemic has resulted in private sector CapEx not coming in the way it should have. But I'm hoping that we are towards the end of this pandemic. It certainly looks like, but I don't want to jump too early on that. Externally, we are hoping that by the second half of this calendar year, the growth from China starts impacting positively world growth. And it's only the Europe situation that needs to come back into positive movement for growth. But overall, we believe that the world economy and India in the coming quarters can start moving towards new investments for higher growth and demand. And to support that, these merit-based subsidies, where they help spur new investment, should make a big difference.
Well, Sanjiv Puri, all of you have talked about the need for the government to continue to do the heavy lifting as far as CapEx is concerned. A 36% higher allocation is what we saw as far as CapEx goes last year, and the expectation is that the government will replicate that. But what about the private sector? Do you have any indication that we are going to now start to see the private sector engines firing when it comes to investment?
So I think the mood is certainly very positive. I think there is a great conviction that the worst is behind us. And the recent survey that happened amongst the members of CII also shows positive sentiment. And as we know, capacity utilizations have picked up. I think we must also keep in mind that the capacity that industry had put up prior, although that time also CapEx was a little weak, but had put up, they were meant for the periods during which COVID happened. So it's only now that capacity utilizations are coming up and they are beyond 70%. We are already seeing green shoots of investments in chemicals, in metals, heavy machinery, and I also can tell you in the sectors that we are in food and beverages, we are seeing investments. And so it is starting to pick up. Capacity utilizations are up. The challenge that we face at this point of time is more a global headwind. And with, as Sanjiv alluded to, I think in a couple of quarters or so, I think things should get better. So that also should help us move on further. But certainly it's very, very much picking up. And the mood is positive.
Thanks very much, Sanjiv Bajaj, Sanjiv Puri, Chandrajit, Banerjee, and R. Dinesh for joining us here on CNBC-TV18 with what India Inc. wants from Finance Minister Nirmala Sitharaman.